Hello guys, and welcome back to the channel. So in this video I want to talk to you about managing expectations and where Palantir is going to go from here as a stock, because we have had great earnings, right? I feel amazing about my investment in Palantir. I feel that my bull cases has been vindicated, but where do we go from here? Does the stock go to $20-$30 this year in 6 months, or do we go down from here, or what's going on? So this is the point of the video. I want to recap what was good about earnings and then my short-term prediction with as regards to the price targets. And I think that this is a really important video for Palantir investors. So if you like this content, as always, please make sure you hit the like button and you subscribe to the channel. And why not follow me on Twitter? I'm going to move my face so I can show you. My handle is VinceIsBullish. So say hi to me there on Twitter and let's go. So don't get too excited. The stock price has a problem. So I'm going to reveal the problem at the end of the video, like a good YouTuber does, to keep you guys on the hook. So jokes aside, I kind of have to explain it before I get to the end. The point is, this was a fantastic quarter, but this was just a quarter. For the stock to go over $20 and $30 and go to the moon, we need to have many of these quarters in a row and even better quarters. So I'm gonna get to explaining this. So, but I must say, I did a lot of videos about what I want from this quarter, and it was like Palantir read my wish list and then they gave me just everything from the list. So I don't want to bore you with the numbers of this was the revenue and it was this much percent over last year. I just want to go through the main things that I think play the most role. So I think one of the most important things was Alex Karp's shareholder letter. I don't know if you have read it as an investor. If you have not, please go ahead and read it. What I loved about it is it could have been about so many things, because they have done so many things right, but it was about a few lines about we're gap profitable again, but then the rest of the letter was about this new platform, the AIP platform, and how much organic interest they have, how many years they kind of knew that this was coming. And funny enough, Alex Karp's philosophy seems to be quite prophetic at this point, because it looks like they were preparing for this, that the large language models will come in and really take over everything. And they are moving resources in the company to the AIP so that they can get this to market faster. They're accelerating the timelines. They have organic demand, and they're going to, absolutely chase market share and really try to grab new customers with this product. So that's what I wanted to hear, and that's bar none the most important thing to me as a shareholder. Then obviously the gap profitability didn't hurt. This is kind of counterintuitive, because me as an investor, I don't care that they're gap profitable so soon. But if they get 2 more quarters of gap profitability, they will be included in the S&P 500, which I still don't care about. But this will make it so a lot of funds are going to have to buy Palantir stock. And it only means that our nice juicy discount of having a cheap Palantir is going to go away when they get included, because all the index funds and many investors don't invest into companies, or many funds don't invest into companies if they're not in the S&P 500. So we are going to have a lot of buyers come in, and whenever you have a lot of buyers come in and not enough sellers, the price goes up. Then they revised guidance to the upside. I mean, to be honest, they had a very low guidance, and I still think that they're sandbagging their guidance. So they raised it a little bit, but not high enough. But that was very nice to see. And the stock-based compensation is lessening. This is a chart that a fellow Swedish investor put together. I'm going to, he posted it on Twitter, and I'm actually going to show you his Twitter handle so you can follow him. He does fantastic posts on Twitter, and this is where you can see the stock-based compensation as a percent of revenue for Palantir. You see, this is the time when obviously everybody was freaking out about stock-based compensation. This was when they DPO'd, and obviously this is brutal and looks horrendous. And you can see that the stock-based compensation is steadily declining and now we're at the point of 22%. So now a lot of people, I see comments on Twitter, they expect somehow the stock-based compensation to 100% go away, and I have bad news for you, it's never going to 100% go away. Even Apple still to this day and Google pays their employees with stock-based compensation. Bar it, it's a very, very little stock-based compensation. So I think what's important for Palantir is to sort of fit into the industry level that, you know, this industry that they're in does. And I have read that somewhere, I don't know how reliable the data is, that it's around 18%. So I think that they are very, very close to just being normal on the SBC. In fact, I think if 18% is the norm, you can call this normal. So SBC is no longer an issue and it's on the way down. So this is the guy that posted it. You can go ahead and subscribe to, or follow him on Twitter, and me. Make sure you follow me also. So here is some other goodies. The US revenue is growing very, very nicely, 23% year over year. Then the US commercial revenue was growing 26% and the US government was growing 22%. So notice that these numbers are really good and commercial is growing faster than the US government. And this is what we want to see, because the big bull thesis of Palantir, or what potentially has Palantir become into the 500 billion and trillion market cap, is that they sell to a lot of companies. It's not that they are a perpetual government contractor. So you want to see the commercial growing faster than the government. And this is the first, like, not good flag, is that when you don't look at only the US sector, you look at, you know, international, the government was growing faster than commercial revenue, and the commercial revenue was actually growing very, very slowly. So two words about this. One of them is that we are having a very bad economic climate, and many of the SaaS competitors, cloud providers, for example, Amazon was reporting slowing, AWS growth. And they were even talking about how they're consulting customers to spend less on AWS. So it's kind of understandable that they would be growing slower because of the climate. But the fact that in the US they have a re-acceleration of growth and they grew 23% is very, very bullish from many angles. They're like outproducing their industry. They're bucking an industry trend. And it's just very, very good. And then Karp talked about how the US is very good at adopting new technology, and international, they're not doing so good. And because the US is expanding, so they're refocusing the company to expand and gain market share where they're expanding, and then they will focus on international later. And I think that this is the correct strategy. I mean, take the low-hanging fruit where you can, and then, go after the tougher cookies later. So here you can see the revenue growth was 18%, and the total revenue of the average top 20 customer went from 45 million to 51 million. And this is where I think Palantir has a slight problem. Almost half of their total revenue is done by the top 20 customers, and I don't understand how they're still able to grow this number, right? So basically, until they get a lot of new customers, Palantir's growth is super much subdued. Okay, if the top 20 customers are growing slowly, let's say they're growing 1%, then all the other customers need to grow like 40-50%, so that Palantir even just has a 20% growth, right? And how real is it that they can scale at a customer for more than 51 million a year? I think that here they are reaching very, very mature relationships, and this is going to be a headwind for Palantir in the future. But what is offsetting this headwind, which is a super bullish news for the company, is that they are gaining customers. I did a video about Palantir's business model, and I think it's one of the best videos that I have done on the channel. And you have to understand that whenever they are gaining new customers. I mean, sometimes Carp gives the product away for free. Look at what happened with the NHS in England. When COVID came, he gave them the product for $1 or £1. When Ukraine was attacked by Russia, Carp just went in there and basically gave them Palantir for free. And I think till this day, they are not getting paid from Ukraine, right? So the new customers are bringing very little money, but Palantir goes in and spreads like a cancer in those organizations. And, then they get 1 million, and then they scale to 3 million, then they scale to 10 million. So it takes some years to get in these customers, but as long as they're getting new customers and this number is increasing rapidly, that it's going to offset the top 20 customers. That the future is going to be, you basically see future growth cemented in this. And you can see that you want, even what's more important in this, again, is the commercial customer account. And you see that the commercial customer account grew from 184 to 280 within 1 year. So this is almost a 60% increase, super bullish for the company. So if I told you, like not red, but yellow flags before, this is like a mega green flag for the company. And here you can see the total number of customers, 41% growth. Here they include also the government customers. Again, you want it to look this way. So you want the commercial customer account to look amazing because you want Palantir to expand in the commercial. And so this is all good and namby-pamby. So the stock price has a problem. And the problem was that before earnings, Palantir was fairly priced to be a perpetual low growth stock. So what I mean by this is sort of we went into this bear market sentiment and the price reflected the worst case scenario, meaning when Palantir was at $6, you practically had no downside in the stock. If they don't accelerate anything in the earnings, the stock is just worth $6. And as the years go by, you get a, 13-14% return as the analysts have to readjust the price to take out the discounted cash. As you discount every year 13%. So every year the company is worth 13% more. It depends on what you use as your discount rate. Most people use 10, but if the company is very volatile, they use a bit higher number. I think 13 is quite a good number for Palantir. So the only thing that happened in this quarter, because if you already had a bull thesis about Palantir, so the only thing that happened is they showed that we are not going to grow super slow. We're going to go a little bit faster than super slow. Keep in mind, they revised their guidance, which was a big thing for Palantir bulls, but they only revised it still to a 17% growth year over year this year. I believe that this number is very, very sandbagged. I think that they're going to easily do 20%, but it's still only 20%. So basically, what is happening now is that the analysts are re-rating the stocks and the bulls are recalibrating their price tags, and they're saying, okay, because it was a fantastic quarter, right? Like we should feel very good with as Palantir bulls. But if you look from the outside, you don't consider your emotions of how good you feel. The only thing that really happened in this quarter is that they are growing slightly faster. So you have to adjust the fair price from the $6 to $7 for Palantir, probably to around $9 to $10. So that would be the fair price for Palantir if they're growing at this rate. So if nothing would change, Palantir would do the same good quarters every quarter from now on. The stock price shouldn't really move anywhere other than this 13% year growth because of the discounted cash flow. I hope you guys understand this. But I know that many of you are here, you want to see Palantir at $20 and $30, and I just want to manage expectations and lay out what the current quarter will give you, and now we're going to talk about what is needed for the stock to really skyrocket and go to like $20 and $30. So for that to happen, we need a significant reacceleration of growth. And this is sort of happening. Palantir is having a really hard time with this because this is by the same guy on Twitter that I mentioned before. You can see his Twitter handle here. That's because this is the chart of the top 20 customers of Palantir. And you can see that when in 2020, the top 20 customers were 61% of the total revenue. And this is decreasing. And again, that's a very, very good sign. But the problem is that these customers are gigantic effing customers and the relationships are very, very mature. So until they get, I don't know, 50, 70, 80 new customers that come in this super big range, like scale up to that, which is going to take them years, they're kind of taken a little bit hostage by the net dollar retention of these customers. So again, if these customers, it's impossible to grow them for more than 14%, then all the other customers need to grow, 30, 39% for Palantir to have a 25% growth. So many people don't think with this, but again, because the customer number is growing and those customers are scaling, you basically see that this is going to happen in the future, but it's not going to be next quarter or the quarter after that. So again, what do I think the Palantir stock price is going to do? We have had this major downtrend all the way down to $6. Then the stock price has been in a bottoming out process here. And again, basically this was Palantir going from sky high expectations, being a meme stock, to, re-rating the expectations, coming closer to reality. And at this point was sort of when reality caught up with the stock price. And here Palantir was priced for perpetually maybe 10% growth per year, and that was the fair value for the company. So obviously we have to rethink this. So the stock price should be higher, but it doesn't justify the stock to go back to here when everybody was thinking that it will be 40-50% growth per year. So what is the future of the stock price? So I believe that we are going to be trending upwards higher from here, but it will be a slow rise. As I said, maybe 20% per year if we are lucky. And I think 20% per year is very good. I know it's not what you guys want and not what you guys want to hear, but I will tell you what needs to change so that we get a much higher growth. I just really want to make sure that you have your expectations set correctly, and we don't go like if Palantir reaches now $12, which would be effing amazing, and really, we came from 6. It's like more than 100% increase in less than a year. It's a very, very good increase, and I just want to make sure we don't spit on that because we have the wrong expectations and the wrong idea about the stock. So what I'm going to do is I want to see how I can add more shares if the stock price goes back down below $9. I haven't exactly decided yet what is this limit, but I feel that the story of Palantir is turning around, and I feel that the bull case has been very, very much vindicated. So a lot of risk has been taken out of the stock. It's not the same when the stock was at $6 and everybody was negative about the stock. Since they reported the second GAAP profitable earnings, so many people who were Palantir haters, I saw on YouTube, they started to go like, okay, yeah, maybe it's time that we take a serious look at this company. And I have a feeling that the cheap Palantir price days are over, meaning like below 10. And if for some whatever reason the stock price goes below 10, I want to have a target price when I'm like, okay, I have to add to this because this is just mad. But what is needed for the stock to go to plus $20? So we would need to have rate cuts by the Fed because that again recalibrates the stock valuations. We would need a very serious reacceleration of growth. Again, very unlikely it will happen in the next few quarters, but as the customers are going, as this new AIP platform is launched and, we start getting real numbers from the field, from, real sales, this definitely could happen, I believe, next year. The S&P 500 inclusion definitely is going to help the stock price. I don't know or don't think that it would push it over $20. I think the S&P 500 inclusion could add $2 to $3 to the stock price. And if the PE of the stock would increase because of the hype that is around AI, that could also very, very significantly move the stock price up. So these are the factors that would, these would be not normal, but they could happen. These would push the stock over $20. But if these don't happen, I think that we're going to have a slow 20% per year increase, and we will start having an uptrend on the stock finally. And this is what I think is going to happen, and I hope that I managed to set your expectations. But please let me know in the comments, what did you think about this earnings? Are you happy as a Palantir shareholder? Are you going to add to your position? And what are your expectations? So please let me know in the comments. Make sure you follow me on Twitter. Vince is @bullish. Make sure you're subbed, and I'll see you in the next video. Ciao, ciao.